We are here to discuss the first quarter of financial year 18-19 results declared by the company. Revenue increased by 16% year-on-year to 4,250 crores, driven by strong growth across most of our business verticals. The EBITDA before Forex and other income decreased by 7% year-on-year to 779 crores. EBITDA margin was at 18.3% for the quarter under review and declined by 450 basis points year-on-year. Net profit declined by 12% year-on-year to 458 crores. In terms of business breakdown, formulation business contributed to 82% of the total revenues and clocked a revenue of 3,501 crores, registering a 15% growth year-on-year. API business grew to 748 crores for the quarter, an increase of 20% year-on-year. In the formulation business, the revenues from the U.S. market stood at 1,890 crores, an increase of 11% year-on-year. On a constant currency basis, U.S. revenues witnessed a growth of 7% year-on-year basis to $282 million. The growth was primarily driven by improved volumes in existing products. We have received final approvals for 13 ANDAs, including 1 injectable during the quarter. We have filed 7 ANDAs, including 3 ANDAs for injectable products, and launched 14 products, including 4 injectables in the quarter under review. Aurobindo USA, the company marketing oral products in USA, has witnessed a growth of 7% year-on-year. Auromedics, the injectable business, remained flat on year-on-year basis to $36 million. We have filed a total of 95 injectable ANDAs as on 30th June, out of which 60 have received approval, including 2 tentative approvals, and the balance 35 are under review. Auro Health, our OTC business in the US, has continued its strong growth momentum driven by new product launches. The company, as on 30th June 2018, has filed 487 ANDAs on a cumulative basis, out of which 342 have final approval and 33 having tentative approvals, including 10 ANDAs which are tentatively approved under PEPFAR, and the balance 112 ANDAs are under review. During the quarter, we have filed our first dermatology ANDA as well. Europe formulation revenues clocked 1,199 crores in Q1 FY18-19, an increase of 31% growth year-on-year. On a constant currency basis, the EU revenues grew by 16% year-on-year. As on 30th June 2018, we have transferred manufacturing of 94 products from Europe to India. In the month of July, Aurobindo Pharma has signed a definitive agreement to acquire commercial operations and certain supporting infrastructure in 5 European countries from Apotex International Incorporated. This acquisition is in line with our strategy of entering into Eastern Europe markets. Growth markets witnessed a growth of 32% year-on-year basis to 257 crores. On a constant currency basis, our growth markets reported a growth of 27% year-on-year. ARV formulation revenues stood at 156 crores, declined by 36% year-on-year. In terms of segmental classification, US formulations contributed 44% of the overall revenues in Q1 FY18-19 versus 46% in Q1 FY17-18. Share of EU formulations increased to 28% in Q1 FY18-19 versus 25% in Q1 FY17-18. Growth market share improved to 6% in Q1 FY18-19 versus 5% in Q1 17-18. ARV segment represents 4% of the overall revenues in Q1 FY18-19 versus 7% in Q1 FY17-18. AP business contributed 18% of the total revenues in Q1 FY18-19 versus 17% in the previous year for the same quarter. R&D expenditure is at 169 crores during the quarter, which is 4% of the revenues. Net direct capex for the quarter is around $55 million. The effective tax rate for the quarter is at 20.2% of PBT. The closing rupee versus US dollar rate was at 68.47 rupees in June 2018 and rupees 65.17 in March 2018. The net debt as on 30th June 2018 was $571 million against $538 million as on 31st March 2018. The majority of the company's debt is denominated in foreign currency. The cash and bank balance is at $203 million. The average finance cost is at 2.3%, mainly due to availing multiple foreign currency loans. Forex loss for the quarter was at 68 crores, which includes MTM loss of 3 crores on forward contracts and remaining amount due to reinstatement of loans, intergroup elimination of currency variations. This is all from our end, and we are happy to take your questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question, sir. My first question is on the U.S. business. It's seen a good ramp up quarter on quarter, but obviously injectable has remained flat. One, how do we look at the injectable business over the next few quarters now that the Unit 4 is cleared? We have got a few good approvals. And two, what drove the quarter on quarter improvement? Is this the new business activity new business opportunities that we talked about that's driving this growth?
So basically, you would appreciate the fact that there are two large reasons. One is because Unit 4 AR we were awaiting, and related to that, the product approval was also awaited, and also Etrapanam approval took some more time. So these are the two predominant reasons. And ultimately, the back line also has to kick in terms of creating the revenues in the bottom line. As far as the current year is concerned, even though first quarter has been soft, we are fairly confident to say that we will still maintain our guidance of 30+% in terms of the growth for the current year compared to the previous year, Neha, as far as injectable is concerned.
Mm-hmm. And this ramp up will start from the second quarter now, right, sir? Because all of the issues that you mentioned are pretty much resolved into the second quarter.
Not all would be in this quarter. Example, Etrapanam has already been approved and we have launched the product, and a couple of more products also would help this quarter. But then ultimately backline would come by around October timeline, so that will also add as far as the overall year is concerned, Neha.
So this growth will be more back-end weighted in that case?
So it would start from second quarter. I won't say everything is back-end. From current quarter onwards, you will start this difference.
And so, and the second question, then what drove the quarter-on-quarter improvement in U.S.?
So I think basically it's more of a base business improvement, and that is one of the predominant reasons is what I would say. In fact, for overall year also, I think there are certain things which has positively happened. To give an example, we had one certain NBOs to the extent of $90 to $100 million, which would be served over a period of 12 months, 12 to 14 months, I would say. I think that is one of the key aspect of it in terms of, I think, the overall growth for the years as well.
Okay. And sir, if I look at the gross margins, particularly because U.S. has been good, why have the gross margins declined? There's a mention in your press release of certain provisions, but if you could give more color on what these provisions and how, excluding these provisions, gross margins have done?
Yeah, so the decline in gross profit margin was largely due to provisions related to product recalls and products sold in the past. Apart from the change in product mix, which will also add to a reduction in the gross margin, which you would agree with me, Neha. And also certain raw materials and intermediate prices have gone up in APA, and the market correction would happen subsequently because it would not happen at the same time, as you would appreciate. So the first three aspects of it, whatever I told is more of one-off, so this we don't expect it to repeat, and that is the one which largely brought down the gross margin.
Then excluding this, what would the margin be like?
I don't think that I would be specific on that, but I would say, I think I would put it this way. Let's say, I think as far as the provisions are concerned, it would be around 90 to 100 crores, and the remaining, I think, is divided between, I think, the product mix as well as, in terms of certain raw material increase, but predominantly more of product mix, which will also, over a period, when our injectable starts growing and the other better margin products start growing, it will be skewed more positively towards the improved gross margin, Neha.
Got it. Thank you so much, sir.
You're welcome, Neha.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. Govind, just one question. This provision you mentioned about almost 100 crore. Now, this is almost $15 million, right? If I just take a gross margin also of about, let's say, even very conservative, let's say 60% or 50%, this amounts to sales loss of almost $40 million. So which products we have written up almost which would have amount to $40 million inventory write-off in a quarter?
I'm not going to get into the specifics, Anubhav. What I would only say is, please understand the fact how the U.S. market functions and how the provisions are coming sometimes in terms of later. So that's how it is. So this would include certain products which we had sold in the past and for which we are absorbing as far as the provision is concerned.
So, sorry, is this what you're saying is more like a shelf stock adjustment?
It is a shelf stock adjustment, Anubhav. That's right.
Okay. Okay.
Both
so this
shelf
is
stock and as well as returns and multiple things, around 80 to 100 million.
Sorry, you mentioned
80 to 100 crores.
80 to 100 crores.
No,
this is not an inventory write-off. You would say majority of this is shelf stock adjustment.
Yes, it is not inventory write-off. It is more, majority of it is shelf stock. And then we also talked about, certain return provision also, Anubhav. So it includes both. That's what Mr. Reddy was also clarifying.
Okay. That's helpful. Secondly, on working capital increase, can you just explain that why these receivables would have expanded so much? Because it's an increase of almost $60 million almost increase of working capital.
Yeah. So let me cover the net debt as well as the working capital simultaneously. So the net debt at the end of the quarter has been increased by 33 million. So we generated a cash profit of around 100 million. And we spent direct capex of around 55 million and indirect pre-operative expenses, reinstatement of the foreign currency on the capital work in progress, etc. All put together another 15 million. So that comes to 70 million. The working capital has increased by 63 million. That totals to 133 million and we generated a cash profit of 100 million. That led to an increase in the net debt to the tune of 33 million. So when I go back to the net working capital increase of around 63, it's actually 60 million. So 60 million, around the 33 million is on account of the inventory. I would say around 50 to 60% of it is increase in the finished goods because we have taken, as Govind explained in the earlier question, we have taken the NBO, which is likely to come around 90 to 100 million in the next 12 months. So increase in the finished goods is one of the key thing which we have done this quarter. And around 14 million is the increase in the debtors and balance is adjustment between the current assets and the current liabilities.
And this inventory increase on top of, in fourth quarter, I remember we almost took inventory increase in, let's say, second half of last year of almost $100 million. So we further increased by almost $15-20 million in this quarter.
Yeah, Anubhav, we have clearly said that we would like to have minimum inventory of 3 months. Please remember the fact that we had also said at that time, will be spread across this quarter as well.
Okay. And just last question I have on ARV business. Now you will start the DTG sales contract, and earlier you mentioned that you got a contract of $80 million spending over 2 years. So should we assume that $40 million is for 3 quarters? I mean, let's say 3 by 4. It will we should realize that in this year?
So this quarter surely would be better than last quarter and predominantly driven by the DTG orders which you already received, Anubhav. I think that is for clear. That is for sure. So now as far as the future is concerned, we had to deliberate about 1 more quarter because there are certain concerns which have been raised in terms of certain the moment cannot consume on a certain age group. I think that is being still addressed, and that would, once that is cleared, which we are fairly confident that would get cleared over the next few months, I think definitely we will be able to realize majority of the numbers driven by the DTG as well. Apart from that, we are also conscious about working towards improving the non-DTG product combinations as well to ensure that we are coming back strongly in terms of the overall ARV portfolio sales. And I'm fairly confident that from now on, I think we should be able to see the improvement in terms of the ARV business, Anubhav.
Okay. Thank you, Govind. Thank you.
You're welcome, sir.
Thank you. The next question is from the line of Ranjit Kapadia from Centrum Broking. Please go ahead.
So my question relates to dermatology business. We have filed for ANDA. So what is the future pipeline and how does the dermatology look in the U.S. context?
I think Mr. Reddy would be able to give a better color on that, Ranjit bhai.
Thank you. We have just filed 2 products and we are filing in another 12 months, another 10-12 products, and it is a very premature to tell at what stage the pricing things at that time. After 1 year only we are going to launch 1 or 2 products. Full launch will happen around 18 months. So I don't want to comment how the margins will be there after 12 to 18 months.
So, but these revenues will start kicking from FY20.
Yeah, around some revenues, the first few ANDAs, 2-3 ANDAs will come approval from in June, July of 2019 onwards.
Okay. Thank you, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisor. Please go ahead.
Yeah, thanks. A lot of my questions have been answered. I just wanted to know the impact of the likely impact going forward due to the price increase, because of China environmental clampdown. So if you can just tell us what is the impact this quarter and what do you think is going to be, from here on? That will be helpful.
Yeah, so the current quarter, it has impacted Nimish. Surely, I think that is one of the reasons we also mentioned. And also generally, Nimish, you have to remember the fact that whenever the price increase happens at the raw material intermediate level for the API, the market correction would take some more time before that particular absorption by the customers as far as that is concerned. So to that extent, it may not happen in the same quarter. The next quarter, it will take some time. So we are also working towards ensuring that I think wherever we see that it is going beyond the threshold, we have already started qualifying Indian sources as well as wherever it is needed. We are also looking on our own in terms of either getting toll manufactured or contract manufactured by developing the process on our own. So my opinion, I think this is something, in fact, at one level, I would even say this is beneficial because otherwise we would not have looked at all these options of securing ourselves. That is how we look at it, and we are moving forward to ensure that we are not going to be under pressure on that forever. That this would hurt us for next few quarters in terms of certain percentage point, but then we are also confident that we would be able to still grow with that particular issue also because, I think the product mix would be still better. But having said that, we are working towards improving this aspect of it as we move forward.
Okay, can you quantify the impact in this quarter? And also, if you can let us know what is the exposure to Chinese raw material? I'm sorry?
I'm not being specific. Let me put it this way. I think I'll give you some more color in terms of so that you'll get comfortable on what we're doing. So, as far as API is concerned, even today, predominant of the top line, let's say around 60% would be an antibiotic. Where the antibiotics, wherever I think the increase happens, we would be passing it on to the customer because they are all low margin product and that is not something which we can absorb. So as far as the non-beta-lactam is concerned, which is around 40%, it's what I said, it will take some more time for the market correction to happen, which will ensure that we are not taking the complete hit.
Okay, but I'm also, talking about the U.S. the raw material getting into the U.S. formulation sales. So will that be impacted because that is where you cannot pass on the price? So, that is my major worry. And if you can just...
Yeah, I understand. But Nimish, you have to understand the fact to an extent it has impacted even in the first quarter. But please understand the fact, so as we move forward, at some point I think the market correction would happen because I think even the U.S. market, everybody is not going to absorb every price increase which is going to happen. So that market correction would happen would take some more time to happen. So to that extent, that is something which we are observing. Having said that, in the beginning of the call, we also talked about having one certain NBOs. Generally, NBOs have better margin than the normal business we have. So to that extent also, we would be able to accommodate this for some more time. That's what we are explaining, Nimish.
But one thing is clear, Govind. Definitely, some prices are increased, raw material prices. Some impact is there in the last quarter and this quarter, both the quarters. No doubt about that. Across the prices are increasing.
Okay, fair point. Appreciate that. And lastly, if you can give some outlook on the interest expense, given the interest rate scenario world over. So do you think this will increase or how should we look at it?
So it is expected the interest rates, federal will increase the rates by 25 basis points every quarter in the next 2 quarters. And so accordingly, our interest costs also will go up because that's a basic interest which we have to pay.
Okay. So currently, I think you mentioned that 2.3% is the finance cost.
You can take it to 2.6 in the next quarter and 2.9 to the December quarter. Like that, you can do it because mostly our loans are foreign currency, right?
Right. And then it should stabilize at what, 3.2 is, I mean, just a guesstimate.
It all depends upon the FOMC.
Okay, fine. Okay, thank you.
Thanks, Nish.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, thank you for taking my question. First question is on the OTC business. I think opening remarks from Govind suggested strong growth. Can you just kind of quantify what the growth is, and also on Natrol? So what is the run rate we're doing? So that's my first question.
Yeah, so as far as OTC is concerned, the overall year will still targeting around $60 million, even though I think it is a bit slow in terms of start, but we are still confident of making it up for the full year. That's as far as OTC is concerned. As far as Natrol is concerned, the top line is growing well, but we have launched a new line in terms of gummies, which actually would have some more marketing expenses. So the sales growth, I think we don't see an issue. Definitely, it should be double digit in terms of I think let's say 10 to 15% is something which we are fairly confident about in terms of the top line growth. Shyam.
Yeah, so Govind, we did 32 million last quarter, so that we are on run rate for that 120 million plus, is it? For Natrol?
Yes, definitely. No, actually it was 34.1 million is what for the first quarter. So you can definitely take that run rate as something which is achievable.
Okay, so we did 32 this time last quarter, now it is 34.
Yes, 34.1 is for the first quarter.
I got it. Okay. So, and the second question is on DTG, I think, adding on to Anubhav's question. So, have you started booking revenues now in DTG, or is it there in your line items today, or it will take some more time for it to start showing up?
We started billing that, but so the last quarter would have been, some numbers would have been booked, but then that would not be significant. But this quarter definitely would be better than last quarter. So whatever orders which we had booked till November, definitely, we have orders booked to deliver those products till November as far as DTG is concerned. After that only, we had to wait for some 3-4 months in terms of by the time all these sponsors as well as the technical team are sitting down and addressing that issue in terms of how do we address that certain woman group which had certain side effects which was claimed by one of the report which they are understanding it. We are all fairly confident and we are getting a feel that I think for the period of 3-4 months it should get addressed and we should be back on track in terms of our DTG. But as I had mentioned earlier, Shyam, apart from DTG, we are also focusing to ensure that we are coming back strongly in terms of the rest of the portfolio as well.
Got it. So, Govind, if you can help quantify how large is this, like a 80-100 million over time? I'm not saying today, but is it like that large an opportunity for us over time for this entire piece to be?
So over time, the answer is yes, it is feasible, but then please understand the fact I'm talking about addressable market is much larger, but then we also have to be careful in terms of how many people are going to compete and how they're going to behave in terms of the prices is important, Shyam. So to that extent, yes, is it feasible? The answer is yes, it is feasible, because please remember the fact we had earlier spelled out about the 2-year contract also, we categorically said how much we had booked. Even in the contract, we had to wait for additionally 3-4 months, as I had mentioned, to achieve the particular number what we had committed earlier.
And my last question is on the injectable run rate. I think we did 36 million. You still are saying 30%. It's like a steep ramp starting from 2Q. I was just doing basic math. It looks like we need to reach 60-70 million in the second half on a quarterly basis. So which products are there that is going to ramp up almost double today's rate on a quarterly basis?
No, I think we have launched Qtr1 and then we are expecting few more approvals which would accrue. Apart from that, the backline will also kick in. So these are the reasons why we are spelling out clearly, stating that we are confident about achieving that particular run rate, Shyam.
Okay, so and just for reference, so it's last year was 164 million. So if I multiply by 1.3, 210 to 15 million. That is what we are working with, right?
Yeah, that is what we are talking about.
Okay, thank you so much. All the best.
But obviously, one suggestion is it won't be exactly month by month, by quarter divided and then looking at it. I think you need to give us that particular space in terms of I think we still overall year will achieve.
Okay, thank you so much. Yeah, thank you.
Thanks, Shyam.
Thank you. The next question is from the line of Sumit Singhania from IDFC Securities. Please go ahead.
Hi, so that's Nitin here. Sir, on debt now, how should we look at our debt going forward? Do we have still do we need to still add to our inventory, finished good inventories in line with the policy to keep higher inventory?
Yeah, the policy to keep a higher inventory, 3 months inventory, has been spelled out very clearly in the last call itself. We said in the last call we will be reducing the debt by about 100 million and we will continue to work towards that.
And so this is despite the acquisition, the recent acquisition that you announced on the European business?
No, we are not talking about the acquisition. That is separate. As and when it happens, we will review the numbers and then tell you.
Okay. And secondly, Govind, on this provision bit, so this chargeback, the shelf stock adjustment is a pretty normal business activity. So why would you flag that out in this quarter?
The reason is it was not normal because it was more because of certain products. That is the reason we have flagged out, and we don't expect that to happen quarter on quarter to that extent.
And this is captured in the cost of goods sold or in the top line itself?
In the top line, and whatever stock which has been given to the distributors and which we have not billed it will be captured in the cost of goods.
Okay, thanks. And lastly, Govind, when you look at the non-injectable piece now for the rest of the year, how should we think about it? Are there any meaningful launches which are there, or it's just about the new business opportunity growth in the base business that will keep driving growth for us?
There are meaningful launches which are coming up, like I think which includes metoprolol, that is generics, toprol, as well as like I think lansoprazole delayed release, which is generic privacid OT, and at some point of time we will get Welchol as well. So we have, I think, meaningful launches in terms of oral as well as like in some injectable products which can take in. So definitely, like I think there are some meaningful launches apart from whatever we talked about in terms of the NDOs and also the OTC improvement and the injectable improvements. So definitely, like I think we have enough.
And what's the time frame for toprol and prevacid?
It should be within this year, I would put it this way. So we have got, all these products we have certain TADs, but then we have to be careful in terms of are we going to commit the TAD, because as of now, like based on whatever queries has been raised and addressed, we are maintaining the TAD, but we are still fairly confident that within this year it will happen.
Okay.
If you take an example, toprol, like we have an October time, and we'll just say that, but then that is based on today's understanding because we have submitted the response and we are awaiting the clearance. In case if there is, let's say, additional query comes, which we need to address, it should get closed within, let's say, 4 to 8 weeks of the time when the query is raised. So this timeline within this year, we are fairly confident about launching this product is what I would say, Nitin.
Okay, thank you.
Thank you. The next question is from the line of Surjit Pal from Prabhudas Lilladher. Please go ahead.
Thank you for taking my question. Govind, this 80 to 100 crore, which you are saying is that one-off, is it related to failure to supply penalty?
No, it is not failure to supply penalty. Surely not. So that is not something which we are talking about in the 80 to 100. This 80 to 100, what we talked about is like certain recall as well as certain provisions is what we talked about.
Yeah. So basically, the kind of product which you recall last year, say from November, are those products related to those recall, or and whatever the product was left over, you just recalled, to be on the safer side?
Yeah, all expenses. All expenses and recalls, everything has come in the last quarter. That is one of the major, and others are small items.
Okay.
So just one of the reasons, again, as we have explained it earlier, we don't expect that to that extent. We are again talking about to that extent only. We don't expect it to happen every quarter. That's why we are clearly spelling that out. Otherwise, these are all normal business aspects of it. Go ahead, Sujit.
Right. So since you have increased your inventory days to say 3 months, last quarter it was up to 2 months. Now this quarter it is 3 months. Could you or your accounting numbers still represent some part of failure to supply penalty now?
In the sense?
In a sense that when you are supposed to commit certain quantity and you fail to supply and you pay because of the spend penalty to the distributor, that number is still represented in the account.
Subbu, it is not increased 2 months to 3 months in one quarter actually.
Okay.
Subbu, you can explain what is the real increase in the finished products in the US or Europe? How much increased in the one quarter?
first let me address that failure to supply. Yes, we account it on a quarterly basis based on the estimated provisions, and it is forming already part of the profit and loss account. Second, as Chairman has explained, last quarter we were around anywhere between 2 to 2.5 months, and it has been spelled out clearly. We will take it to 3.
Quantifying the number, how much has it increased is the question.
The quantity which I said earlier, the increase in the inventory is around 33 million. Out of that, 50 to 60% predominantly on the finished goods.
Okay. Okay. So your FSM or failure to supply penalty has been deducted from your sales as per the new accounting standard, right?
Absolutely, absolutely.
So what could be that beneficial increase in your margin?
That is negligible. I mean, it is in decimals, low digits, yeah.
Okay. Govind, as far as UGI is concerned, I found that there are filing of around 12, of which one you have capacitor when you have got, that is in oral. In how many injectable oncology product you have filed, and what could be the current addressable market of this product?
So overall, 8 hormonal and 71 oncology products are under development, and we have started filing products in February 2017, if you remember. As on 30th June, we have filed 13 ANDAs, including 7 oncology, which is 6 oral and 1 injectable, and 6 hormonal products, 5 injectables and 1 oral. Apart from these 13, UGI also bought 2 more ANDAs during the quarter. So we are planning to file 15 ANDAs in this year.
That is all injectable?
It's a mix.
In the oncology, 71 products, approximately 40-45 products are injectables, balance are orals, and almost every product will be filed before 2019 December.
Okay, and what could be the market size at the current market price?
That is actually not the right measure, Sujit, even though maybe it is 45 billion, but that has no meaning to this business.
True. I have a few more. I will come back. Thanks.
Thank you, Sujit.
Thank you. The next question is from the line of Abhishek Sharma from IIFL. Please go ahead.
Thanks for taking my question, sir. A couple of broader questions. Aurobindo's U.S. business is one of the very few which has grown in revenue terms in the last couple of years. And given the fact that, we are in a declining price environment, just wanted to understand, what kind of a volume growth have we witnessed, let's say, over the last 2 years?
Volume growth we have not mapped specifically, Abhishek, so we'll come back on that offline. If that is okay with you, Abhishek?
Yeah, that's fine.
For sure the volume has grown without any doubt. I'm not able to specifically put a number to that, Abhishek.
Yeah, I know. I know it's an offbeat question, but just in terms of, so where I was leading to is in terms of capacity, a new capacity had come up in the last few years. So are we already reaching capacity utilization on that? Are we looking at more capacity addition in order to grow revenues from here?
In the finished two stage, we have already created that Unit 10, which would cater to our additional need of US market, and if any capacity expansion happen, would be more incremental within Unit 10, and we don't see at this juncture the need for creating one more finished dosage asset. Mr. Reddy would be able to confirm that, sir. Is that correct?
Yeah, we have definitely next 2 years up to 2020 December, we have enough capacity, 20 or 21. And except some small miscellaneous capex. Otherwise, in formulation side, we are not expecting in the oral products, there is no additional capacity.
But having said that, some more capex can come on the API, Abhishek, but that will not be like Tectonic. So that is something which we will go through that. So we are also conscious about restricting our capex also to the extent of our cash flow. So we are conscious about that, Abhishek.
Sure. Thanks, Govind. The other one is on the M&A priorities. I mean, given the fact that we are, looking to do some of these segments on our own, and in some of these segments we have, Natrol, which we have acquired. So in terms of our M&A priorities, I mean, what remains? Does opioid... and, given the fact that there has been so much pressure in that market around opioids, I mean, what's the thought process around that?
No, we had looked something, but we have decided not to go ahead with the opportunity, Abhishek. Let me close that topic.
Right. And your interest in opioids remains. Is that...
No, I would put it this way, like Abhishek. See, as far as our, M&A strategy is extremely clear and crisp. We look at market expansion, both in terms of geographic expansion and business expansion, and any new technologies or platforms is what we had spelled out. And that's the basis on which I think our investments had happened in terms of any M&As, and fairly, I think, has been working in our favor in terms of what we have done so far. So is the opioid, in the opioid from that business, from that aspect was, it was looked at, but then we decided not to move ahead, Abhishek.
Got it, good. Thank you. Thanks.
Thank you. The next question from the line of Ranveer Singh from Systematic Shares and Stocks. Please go ahead.
Yeah, thanks for taking my question. So my question relates to ARV business. There we got tentative approval for that combination drug TDL. So just wanted to understand when next tender is likely to open up and whether we will be able to supply.
We have already received orders, as I had mentioned earlier also, till November we have orders for the combination and we are supplying. In fact, this quarter will be some more meaningful supply compared to the last quarter is what I had spelled out. As far as the new tenders are concerned, in terms of the further orders, if I need to spell it, we need to wait for small orders would come from larger orders. We need to wait for, there would be a gap of 3 to 4 months because there are some concerns raised in terms of one of the studies and that is getting addressed. That is why I'm talking about a 3-4 month gap might happen, which the sponsors and the technical team are addressing it. After that, again, we will be able to bring back that particular product as we had anticipated earlier, Ranveer.
No, so what I understood was related to DTG, dolutegravir, and this is the same product we are talking about. There's a combination TDL, that tenofovir, dolutegravir and levodopa.
That's right. Tenofovir, lamivudine, dolutegravir. That's right.
Okay.
And I think as far as South Africa is concerned, Sanjeev, is it fair to say it might be end of the year or beginning of next year that particular tender might open, Sanjeev?
Yeah, that's right. It will be opened in Q3 and awarded in January.
Okay, and as far as market size is concerned, I think we have already discussed, but if I talk about the tender side itself, is this possible to give some ballpark number? What would be the tender size for Africa?
Actually, no, this is yet to be finalized by the government. They are discussing among themselves because there is a conversion of existing product, TEE or TLE, to this DTG. So they are yet to make this decision. They will be making announcement very soon.
Okay, fine. That's it for my side.
Thank you. The next question is from the line of C. Srihari from PCS Securities. Please go ahead.
Yeah, thanks for the opportunity. My question is mainly pertaining to the U.S. market. You mentioned that the base business grew in volume terms. If you could please quantify that, and whether there was any segment where you could even see some price increases. And secondly, if you could please outline the marketing arrangement with Qtr1 Pharma. Thank you.
So as far as the base business is concerned, I think we clearly spelled out in terms of the numbers on NBOs, which is in the range of 90 to 100 million. And typically, the NBOs would have a slightly better margin than our typical base business, Srihari. And Qtr1 got bought out
there is
by...
no more Qtr1 going. It was sold to Acito. There is no Qtr1. The Acito business, as it is, will continue for next 7-8 years.
No, so basically, yeah, you had this marketing arrangement for Diloxetin with Acito. So are more products added to it, or what is the status currently?
No, the same products, whatever we signed 4 or 5 years back, more or less same products only will go with it. We are not doing any additional products.
Okay. And then, Govind sir, I was talking about, you had mentioned a volume increase for your base business. Can you give some kind of a color on that? I mean, was it in low single digits, high single digits?
It should be the low double digit is what I would say, Srihari.
Okay, that's helpful. Thank you.
Thank you. The next question from the line of Charulata Gaidhani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to the inventory write-offs. Do you expect more such write-offs in the coming quarters, or is this all that is done with?
No, we don't expect in the future like this, because these are all pertaining to some recalls. We made provision for the stocks and we have taken some chargebacks, etc. It's a blend of both at the front end as well as at the raw material, finished good end. We don't expect this to continue as Govind explained earlier. Okay.
And my second question pertains to the ARV business. How has the business grown in the current quarter?
Actually, there was a degrowth as far as Q1 is concerned, and we are fairly confident that Q2 would be growing better than Q1 sequentially. That's what we are talking about, Charlata.
Okay. Now, in the coming quarters, you think you will be able to maintain profitability on ARVs? This is in view of the increasing raw material prices from China.
I understand that, but then so when you're moving from the conventional formulation to dolutegravir, generally the margins would be better. I do agree that there are some pressure in terms of the raw material price increase, and we are still I think we would be able to maintain or improve the margin slightly because of the dolutegravir combination driving the growth, and we are also working towards improving the raw material intermediate cost of the remaining ARVs as well to ensure that we are able to come back stronger in the portfolio to maintain the margin.
Okay. Okay, fine. Thank you.
Thanks, Charlotte.
Thank you. The next question is from the line of Prashant Nair from Citigroup. Please go ahead.
Yeah, hi, good morning. Can you provide some, color or some perspective on how you see this recent acquisition of the Apotex businesses panning out from here, say, over the next couple of years?
Yeah, Sanjeev here. I'll just answer that. This particular deal will be consummated sometime in Q3, and we will be thereafter, delineating the strategies. But this would add clear 3 countries where we were almost not present in Europe. So, as you know, we are operating very well in 8 countries. In Belgium, which is a 9th country, we are very, very thin. But this acquisition will give entry into Poland, Czech Republic, and Belgium, apart from strengthening our business in Netherlands and Spain. So, I think the main opportunity will come in terms of getting market share with our new product pipeline into those markets where we were not represented or were very thin. So that will give additional opportunity of upside. And at the same time, we had plans to enter this market through organic route, so it will also buffer some of the expenses. And at the same time, it will strengthen our position in certain channels and segments in Netherlands and Spain, and that will give further boost to our operations. We will be obviously looking at the 50% or thereabout the sales which is coming from outsourced products for this business, and that will give opportunity to bring it to the low-cost manufacturing, the way we have done for Actavis earlier. So I think all in all, this all synergy will pan out in next 2 to 3 years.
As it is, Apotex is around 5 million minus EBITDA. That in next 18 to 24 months, it will normalize the positive EBITDA.
Yeah, hello, Prakash.
Hello.
Ladies and gentlemen, we seem to have lost his line. So in the meanwhile, we'll move to our next question, which is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Just a clarification on the gross margin side again. If I add back that 90 to 100 crore impact, we're still at about 57.5. You mentioned there are a couple of more adjustments. what would be the magnitude of those? And so I'm just trying to understand, like, from next quarter onwards, we are entering a high base of last year where we had Savlama. So would we be able to sustain that 60% kind of gross margins?
So, Prakash, as we explained, it's a combination of multiple things. So we expect next quarter we will go back to our original margin. Whether we will go to 60%, etc., only maybe we'll be able to tell at that time, right? But we certainly expect to normalize we expect the gross margin to be normalized in the coming quarter.
So the question was actually what would have been a normalized gross margin in the Q1?
I think last year we did 58%, if I'm right. Correct, Krishna?
Okay.
So that is what we expect.
Okay, understood. And secondly, if I see the base of last year, obviously injectables was a little aberration because of, this remediation that we were doing. Looking at X of injectable business, would we expect a growth on the U.S. base business factoring in the NBO that you talked about, $100 million?
See, Prakash, it's a combination of everything actually. We cannot say at this stage how much NBO additional margin will come or we lose some other product like that. We cannot do. But what is on an overall basis, we will aim to move towards 58 plus. That's what our objective immediately.
Majority, 95% of the MBOs coming from the oral products. Very few from this one, and as Govind told, Etapanam is the one, and a few more products we may launch and some increases. That's what Subbu is telling.
Okay. So even after the high base of last year, we have enough approvals or expected approvals that would lead to overall growth in the U.S. business is what we anticipate.
Yes. We have categorically said as an institution we will be growing now, Prakash. I think in terms of specifics, I think we can take it more offline, but then definitely we are confident.
Okay. And secondly, on ROW business, in the past we have seen very, very strong growth, both Q&Q and YOY. Again, in 2Q last year, we are seeing a high base of, 2.4 billion rupees. And just trying to understand, so last year what really happened, that has led to a very strong growth, and can this growth be sustainable, or we entered few markets and that's why there was a spike in growth in the last 4-5 quarters?
Last year, actually, the Brazil was responsible for revival of the business, and this year also, if you see in a quarter, we have a 32% growth. I think it is going to be lumpy because many of the markets we operate through the distributor, and also, we invoice in dollar terms in some of the market. So depending upon the currency movement in those particular markets, there will be a certain buy-in and building up of stocks. But if you see on the 6-month basis, we have grown by 20% in growth markets. And we think we will be able to maintain this kind of a pace.
Okay, great. And lastly, on Europe, what would be our current margins, the improvement that we've been doing?
Yeah, we are firmly into the double digit in terms of the EBT for European business, and actually it is grown faster than the top line.
Okay, great. Thank you and all the best.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yes, thanks for this opportunity again. Question on NBO opportunities. I just want to understand very broadly that what is the reason that we've been so successful? If I were to choose 2 factors, let's say we have good capacity available. Second, is that the main reason, or are costs significantly lower versus the Indian peers? Out of the 2, which you put that you've been so successful, which is the key reason out of the 2?
I don't believe the cost is the key. Almost all Indian manufacturers are the same because of the breadth of the Indian portfolio, maybe one of the reasons.
But this, let's say, this opportunities will be won at a molecular level. So how the breadth of the portfolio will help you?
Because of it, we have the more ANDAs, so we have some NBOs in that category. We got a better order.
So when you say that you got $100 million opportunity with you, and let's say what the other $100 or $200 million opportunity that you have not got, is that just because you don't have ANDAs over there?
The price and the ANDAs may not be there, and we are not competitive in those products.
Anubhav, one thing you have to remember is, like, I think every company would be competitive in certain set of products.
Yeah. So we are strong in some raw materials in some areas, and so like that, I cannot get all the NBOs to me only. Everybody will get some part in that.
Sure, that's helpful. And in just terms of, let's say, this NBO spanning out for us, Q1 has seen some benefit. Would you say by Q2 we would see majority of this benefit there in our US sales?
It would get spread, Anubhav. It would get spread over a period of next 4 quarters is what I would say. Mr. Reddy was saying something. Go ahead, sir.
The majority starting from this quarter.
When you say this quarter, this is second quarter you're saying?
Yeah, July to September onwards, the major order is starting.
So this quarter, if the share stock adjustment that we talked about, if I adjust back in the sales, 282 what we have done, and by adjusting, I'm just taking a number, maybe the real sales were about 290 plus. So last quarter we did about 270. So we already seen $20 million extra sales, which you mentioned is from volume growth. So you're not saying that this quarter, the June quarter that we've seen benefit from NBO. So then where did this such a sharp growth of $20 million sequentially came from?
Some penicillins were starting from this quarter, and last quarter is not some areas, and some other products starting August in July to September onwards it is starting, and from there it is 12 months.
But sir, at the same time, can you explain the other question which I asked, that in the June quarter we've seen a quarterly increase of $20 million in the US, where in the oral products that large part of growth has come from?
It's not necessarily oral alone, Anubhav. Like, I think we are talking about the entire, basket. So Netol has given additional numbers. Aro Health, has given additional numbers. Apart from oral also has increased. So it's not purely all of them are from oral, Anubhav.
But majority Govind is from oral. Like Netol has gone by $2 million.
If you compare it, like I think Netol, comparison, like how much has it gone up?
It's around $5 million gone up.
Okay, then
direct sales has gone up.
Direct sales have gone up. Aro Health, how much has it gone up? Like I think so. It's a combination of several things, not purely like I think oral.
Okay, that's helpful. And just last question on Valsartan. Is our pricing still the same as what we were selling earlier before the Chinese player exited?
There is definitely some increase in prices in this coming July quarter onwards, but not too much. Something moderately it was increased.
And Anubhav, you have to remember this is a short-term opportunity, so this is not something which is perpetual forever.
Yeah, I appreciate, but we have also seen some price increase for us.
Yes.
Okay, thank you.
Thank you. The next question is from the line of Shrikant Akolkar from IIFL Securities. Please go ahead.
Hi, good morning. I just want to get some information that you have done 3 to 4 product recalls this calendar year. So is it that is delaying your EIR?
No, so I would, EIR had certain 483 observations which we had to close out. Like I think that did not necessarily delay. The EIR is our opinion, but this is purely again our opinion.
Okay.
But the EIR we have received, right? You are aware of it.
Oh, we already received.
Okay. Second is about the ertapenem product. Now, how do you see the ramp-up and market share going ahead?
I don't want to.
So we have launched very recently, my friend. Like actually we have launched only like a few weeks back. I think it's too premature to talk about the market formation. We are fairly confident about getting a good market share. That's where I leave it now.
All right. Thank you.
Thank you. The next question is from the line of Surjit Pal from Prabhudas Lilladher. Please go ahead.
Hi. Govind, how many do you file any filing under CGT?
So that is a shortage product you are talking about, is it?
Yeah, the competitive generic therapy window.
So I think we had certain... Go ahead, sir.
Yeah. I mean, if we have filed, how many have filed, how many we can extract? I mean, that is on the faster window.
Yeah, per se, I think I need to check it out in terms of exactly whether we have filed under CGT or not, but we had certain products which got reviewed because of shortages. That much I'm aware of it, Sujit. On the specific whether we have filed against CGT, can I get back to you on that, Sujit? Is that okay?
Sure. In European acquisition, there is one country, Poland, where you got quite a good number of reps, and I think one product is quite enormous in terms of size. And if I go by your number of people addition, which is also quite high, because you will be dealing with a lot of branded business. So going forward, do you think this number is optimal, or you are going to reduce it? And then how to turn around your EBITDA level and how you will focus to brand? Because I think brand is the area which is fairly new for your company.
Yes, you are right, Surjit, that actually we have now significant addition of people, but we will obviously finalize our strategy after the day one of the deal. I don't foresee any major changes in Poland, because that is where we had practically no presence. And most of the people are in sales and marketing, and actually they are in a branded marketing. So I don't think there are 246 reps and marketing people that we are going to touch. And in fact, we would like to build on our product pipeline and product launches. So that will come very handy. Of course, we will be operationalizing our strategy a little later. When it comes to, the branded marketing, let me also tell you that actually it is not identical to what we see in India. However, we do have brand marketing expertise and competencies. I think still, the power is there with the doctors, but it is shifting to the pharmacies. And most of the European market, particularly the Western Europe, also have a lot of pharmacy power, to substitute the brands. Actually, that will be our strength area here too. And we are going to continue with the Apo brand in Poland, so that will stabilize the business.
Okay. In Aurobindo, Govind, ACS Doffer got approval before you. So is there any other generic along with you in Aurobindo currently?
Authorized generics have launched, Sujit.
They have not yet launched, you say?
Already launched.
They have launched, okay. Yeah. Okay. And as far as ARV is concerned, given the current run rate you have been doing in last 2 quarters, is it fair to assume that without DTG, your run rate will be more or less around 600 crore yearly?
Instead of that, I would put it this way, Sujit. I think our run rate would start improving. The current quarter definitely will be better because we already have orders, and next quarter partially we have ordered till November. We have to wait subsequently for the clearance of the DTG, but I had clearly spelled out earlier, we are also working hard towards finding out how to make the rest of the portfolio also competitive rather than losing that also. So our run rate can start improving from now on, except for a gap of quarter till the DTG resolution is happening. Otherwise, definitely the current rate, the run rate should start improving from now on.
And you have started production of your Vanco and Panto in lyophilized segment?
Vanco, yes, Vanco now, because Vanco we are waiting for approval.
Okay. Thank you, and wish you all the best.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Krishna Kiran for closing comments.
Thank you all for joining us on the call. If you have any questions unanswered, please feel free to keep in touch with Investor Relations. A transcript of this call will be uploaded on our website, www.aurobindo.com, in due course. Thank you.